Well, good morning and welcome to our webinar where we'll be looking at the journey RS Components took to world-class AP. This morning we'll be hearing from Richard Szeberenyi, Accounts Payable Manager at RS Components, and Daniel Kimpton from StatementMatching.com. We're going to be focusing on how the AP department rose to the challenge of improving internal controls by implementing some new processes and systems without increasing the headcount. The key objectives were to have more robust controls to ensure that AP ledgers are accurate, audit requirements are met, and prompt payment compliance as well. So during the course of the webinar, you have got the chance to ask any questions by typing them into the chat box, and you'll find that over in the control panel on the right-hand side of your screen. If you could type those in as they occur to you, and then either Richard or Daniel will address those at the end. And with that, I'd like to hand you over to Richard, who will take you through some of the steps that his team have taken to achieve world-class status in their processing.
Thank you, Alan, and good morning to everybody, and thank you for coming. So, first, I'm going to introduce you to RS Components, and then to the Finance Shared Services Center and why it came to existence, of course, on a high level. Then I will talk briefly about the evolution of the AP Shared Services Center and about the key aspects of our operation. Then I will have an attempt to explain our thought process behind implementing statement matching in support of our AP process and controls improvement journey. And then I will show how the landscape has changed after the implementation and how far we've got on the road. So RS Components is a trading brand of electrical components. Our history has started in 1937 when two co-founders established Radio Spares Limited, supplying radio repair shops locally with spare parts. During the decades that followed, RS has turned into a £1.5 billion business that employs over 5,000 employees globally. Now we are the world's largest distributor for electronics and maintenance products. We have operations in 32 countries, and we offer around 500,000 products at any point in time through the internet catalogs and at the many trade counters we have to over 1 million customers. Also, our products are sourced from about 2,500 suppliers. Our businesses support customers across industry worldwide, from manufacturing to business services to utilities and infrastructure. Also, we have a scope that is sort of unrivaled across the product life cycle. We contribute to the design, the build, and the maintenance phases of a product life cycle. Still about electrical components and RS. So our group has a global reach and encompasses the brands RS that is present in EMEA and Asia Pacific. Also, it has Allied, that is our brand in the Americas. And the company has recently announced its acquisition of ISA, that is an international industrial business process outsourcing organization and a European market leader in integrated supply. Our vision is to become the global provider of end-to-end solutions, offering products from mechanical to electronics, powered by technology, innovation, and data-led insights. Hence, it is just so right if our internal mechanisms too reflect on this aspiration and provide a scalable platform to achieve this. And hence, RS has embarked on a journey back in 2016 to set up its first Finance Shared Services Center on its main site in the UK in Corby. So about the FSSC and myself, I have been leading the AP department for RS for about 2.5 years now. When I joined the company, RS still operated a geographically fragmented model for finance, This meant that each operating company was self-contained and was responsible for their own finance activities, including accounts payable. Since then, we have come a really long way. The RS EMEA FSSC, as we know it now, is a captive multifunction center that provides value-added services in accounts payable, accounts receivable, and general ledger accounting. Each of these functions is led by an area manager like myself, reporting into the Chief Finance Officer of Corporate Services. Also, our center has begun working back in June 2016, after about a 6-month preparatory phase, with the accounts payable function going live first, followed by accounts receivable and general ledger. The transition of work has taken less than a year for these 3 work streams and the 12 RS countries that was involved. Following the transition, the FSSC has spent the last financial year with stabilizing the transition processes through a series of CI and Six Sigma initiatives. And what started as an attempt to embed the continuous improvement culture in order to support the company's shared services efforts turned out to be an amazing tool to empower employees on all levels of our finance organization and to increase their engagement by encouraging new ideas. At the same time, the management is heavily focusing on enabling the employees to turn those same ideas into reality. That led to finance as a function being now a leading example of the CI culture within the company, with dozens of our finance professionals trained and also many of them certified on the various levels of Six Sigma grading, and over 100 projects in a year's time last year, delivering millions in savings. So still back to the previous slides. Sorry, I was just clicking a bit too fast. What I still wanted to add to our FSSC bit is that during the second half of 2017 and following the completion of the transition, we took up a Six Sigma Black Belt project to support the process stabilization. Oh, sorry, I just need to move on. Apologies for this little bit of hiccup. So, right. So the next thing I'm going to talk about is our accounts payable journey from the start until now. What you can see on the screen are the various phases of our shared services evolution. And in its current form, AP has 29 employees. That translates into 26.9 FTEs, as we are providing some flexibility of part-time employment in some of our roles. And as I mentioned previously, we have gone a long way from the beginning of 2.5 years ago. And that means that historically, AP in Corby comprised of one team only, working on an end-to-end process, supporting only the UK company. But then our first stage at the beginning of the transition was to set up an internal operating structure, initially just for the transition processes. That was a model that was different to the legacy approach, and that means that we have added some specialization to the model by segregating the 2 main components of AP, which is invoice processing and query handling. And that's what you can see on the second section in the screen. The third bit, which is the following phase for us, but it's still during the transition, we extended the specialization to the legacy UK team. And this is where we faced one of our main challenges of the transition. That was some sort of an inherent insistence on the end-to-end nature of the job roles by the legacy UK team, since they have had a long history, many years of history of operating through one end-to-end way. But in hindsight, the team took this change better than expected. But I would say that in any next time I would need to take my teams through any similar changes, I would definitely invest more effort in a more profound change management and communication strategy. However, all in all, the results worked out well for us. And during the second half of 2017, following the completion of the transition, then we took up a Six Sigma Black Belt project to support the stabilization itself. We found that earlier we actually took a step too far early on when we set up the transition processes, the new processes under one single umbrella, as the many different countries presented way too many teething problems and transitional difficulties of their own to be dealt with within a single unit. And as a consequence, we rearranged the responsibilities and aligned the AP operation to a regional structure of 3 EMEA hubs that the rest of the finance organization were already following. But we were able to do this because of the already existing specialization across our countries. And now this model allows a lot more flexibility and a lot better focus on specific issue areas. Now I am going to talk a bit about how we are set up currently in terms of processes covered, and then some of our key figures. So as I mentioned, AP is comprised of 3 teams serving 12 countries that are divided into 3 EMEA regions. Our responsibilities include the classic AP elements, so to say, so invoice receipts and archiving, invoice processing, vendor master data maintenance, employee expense processing, payment processing, vendor query management, which we do primarily via email, but a bit of a phone as well. And also invoice issue resolution, where our main focus currently is on logged invoices, GRIR reconciliation, and statement reconciliations. Some key figures about our operations, just to give you a bit of a flavor of what we are dealing with here on a daily basis. We process about 70,000 invoices every month. Round about 20% of the volume is electronic invoices, and 80% of this is paper PDF. The reason I'm not counting PDF to the electronic side, because we put the paper and PDF invoices through the exact same process that I will talk about a bit later. But electronic means for us primarily EDI invoices, and we have something we call text file upload, which is basically that we receive a flat file from certain suppliers that we then at the moment manually upload to our systems, but this means that we still don't need to do any data entry on these. Electronic versus paper PDF invoice automation is 98% versus 40% in favor of the electronic. I think that's no wonder. But at the same time, we are receiving some 12,000 emails primarily from suppliers, but also from internal stakeholders on a monthly basis. Systems-wise, we are using Process Director for many years now to process invoices into SAP. We scan our paper invoices and use an OCR technology to harvest data from the scanned invoices as well as from the PDFs, and then transfer these into a front-end application where a matching against purchase orders and the approval for the non-purchase order documents happen before finally posting into SAP. In the last year, our focus was not only on establishing the shared services structure and a management model, but to stabilize the processes. In order to stabilize the processes, we were looking for ways to enhance the infrastructure behind the processes. And that is how we started rolling out EDI invoices for the first time in the company's history. And we intend to grow that segment significantly this year. Also, we implemented a new email management tool in order to be able to efficiently tackle that 12,000 emails we receive every month. And also, that is the reason, ultimately, that we decided to use statement matching a couple of months ago in order to reduce the non-value-add tasks in our processes. Right. So in the following slides, I will, sorry. Oh, here we are. Okay, sorry again. So in the following slides, I will focus on our experience with statement matching and why we decided ultimately to implement it. So when we finished the transition of our activities in early 2017, we entered in a new phase. And during that phase, the stabilization of the processes, we realized that certain key control elements were not functioning effectively due to some legacy reasons, both in the transition and in the existing processes. Some of these examples are the GRIR management that was ineffective as a result of many missing and unknown invoices, while the goods were already recorded in our system, in our warehousing system. Also, the missing invoices caused delays, in some cases significant delays in payments, and then frictions with suppliers. Statement reconciliation, while it was an existing process, it was entirely manual, and hence it was focusing only on a few big volume accounts. And this in turn resulted in increased volume of queries from smaller accounts that didn't really get the deserved attention. Then we also lacked the visibility of the progress with our ongoing statement reconciliations, as well as the nature and size of any problems uncovered during the reconciliations process due to the lack of reporting capability. And then besides our discovery, we also had the pleasure of RS's internal audit team reviewing our post-transition processes and controls, and that kind of reinforced the need to find a systemized solution to help improve the strength of our controls. The key hotspots in our control environment was really the reconciliation of the GRIR accounts. Due to the nature of our business, we operate with a very high ratio of PO-related invoices and a very high percentage of three-way matched invoices. This means that about 20 or 97% of our invoices are processed against a purchase order, whilst 94% of the invoices go through an actual three-way matching process. This then creates the requirement of actively managing the GRIR accounts. That in turn requires that we continually reconcile vendor accounts, aka do statement reconciliations. But then with the transition, the complexity of this task has not, but our responsibility and workload has significantly increased to ensure that all the EMEA RS entities' books are reflecting the reality as much as it is possible. So, but what we have had in place in order to support the increased responsibility and workload, that was simply insufficient. That manual reconciliation process only allowed us to focus on the sort of the top 30 accounts based on invoice volume by doing some ad hoc ones based on the demand from our query process. But the entire process lacked some sort of a consistency. Also, we faced quality issues because we did not have a single method, a single system to do the reconciliations. And because our capacity was quite limited, we were resorted to a pretty much retroactive problem solving in this space. And all this mix basically resulted in a quite unhappy state where we kept missing invoices, and basically we were not in control of our GRIR balance as much as we would have liked to. So we went on about making a change because we clearly needed to re-engineer our process. The alternatives in this space were either to reinvent the wheel and develop a sort of in-house solution like a spreadsheet tool, or to buy something of an off-the-shelf tool that readily provides with features we were looking for and that sufficiently supports our operational goals. So the things that we were looking for from a solution, that it needed to be simple and the handling needed to be easy. We required increased throughput with decreased effort. With other words, we wanted to do more with less. Also, we needed this system to require minimal input from us to consistently operate. And then we wanted to transform the AP clerks' time and wanted them to spend their time with value-added investigation instead of preparations for those investigations with the manual reconciliations. And then also we wanted relevant reports about reconciliation status, workload, and then we needed further insights into the improvement areas that the reconciliation process tends to unearth. Our goals with finding a new solutions were to strongly support the improvement of our GRI balance. We wanted much more up-to-date vendor accounts, and through that reduced inbound queries from suppliers, and then improved vendor relationships, obviously, and on an overall, an improved control in the whole AP arena. Right, so some words about where we are now and what we actually achieved. Since we started using statement matching, the efficiency, the effectiveness, and the accuracy of the whole reconciliation process has increased tremendously. Right now, we are up to date with our invoice processing, and so through the statement reconciliation process, now we are able to capture missing invoices much more promptly and on a much broader scale than previously. And we are able to demonstrate, or we were able to demonstrate actually on the most recent operational audits, that we are in control. And also through statement matching reporting functions, now we are able to track benefits of this implementation. So a couple of the highlights from this, the number of the statement reconciliations has increased by over 300%, while the time spent with the reconciliations has significantly reduced, and the volume is actually scalable depending on the demand. So we could do even more. We choose to do as much as we do today because that is what we need to do. We are in control of our missing invoices, which means that based on the current status of the reconciled statements, I can prove that it is about 11% of the total statement volume is missing, and that actually happens to be a workless figure. But also it reporting that 69% of the invoices on the statements have actually been paid, and then this highlights an issue area somewhere in the upstream processes that prevents our suppliers from timely reconciling their payments. And with the details behind this figure, we can now work on further process improvements. We can drive further improvements in our AP process. Also, some 90% of the invoices from the total statements are awaiting payments in our system, and that is an important message that we are now able to deliver back to our suppliers quickly and efficiently through the features that statement matching is providing. And actually, this far my presentation to you. Thank you for your attention. And at this stage, I will hand this over to Dan, who will talk a bit more about statement matching. Thank you.
Excellent. Thank you, Richard. Hi, everyone. My name's Daniel, and I work for statement matching. So what I'm going to do is give you a very quick overview of the solutions. So I've got some screenshots. Right. So this is the landing page. So very colourful, very happy screen for AP to log into. And what you can see on here is the way the system works is it reconciles the statement against your accounts payable data, and then it gives each statement a status. So if you look on the right hand side where it says statement header, I've got some statements which are fully matched. So that means that you've got all the documents on your system and there's no errors. So effectively there's no exceptions. And then moving down, I've got statements which are fully matched with data mismatches. So that means that you've got all the documents, but there's some errors in the data. So if you look below, I've got some examples where the invoice dates are different, invoices and credits the wrong way round, currencies and amounts, that kind of thing. And then the next two, these tend to be higher priority. So I've got unpaid items missing on statement. So that means you've got unpaid invoices on a vendor's account, and the vendor is not showing it on their statement. So it could be a misposting or a duplicate, for example. And then last but not least, I've got incomplete matching. So that means that you've got documents on the statement that you don't have on your system. So that could be, missing credits, that kind of thing. There's different ways to select statements. So on the dashboard, I've got some key reports. So I've got like a missing credits report, and if I run that, it's going to give me a list of statements where I've got missing credits. So you can see it puts the highest value one at the top of the list, and then from here you can actually drill into the detail. So this is what a reconciliation looks like. So it's really simple. You can see I've got the statement data on the left, and then I've got the invoice data on the right. So you can see everything matches up apart from the first line on the statement, which is the credit. So at this point, what you can do is actually email the supplier. So you can email the supplier from my system, and the email addresses the emails will go back into your inbox, or you can download this report and send it from your own email system. So this is what the vendor would see. So you can see, we're requesting a copy for the missing credit. And then the other neat thing is, because we know the status of the documents on your system, we can tell the supplier what the statuses are. And you can see I've got some due dates for payment, and I've got one that's paid, so you can see there's a payment reference. So the whole idea of this is to reduce the calls into accounts payable. So that's an example where something's missing, and then you can also add notes in the system. So you can add notes at a line item level. So let's say you might add a note to say I've requested this from the supplier, and then next month if you get a new statement from the supplier, you can see the notes that you added previously. So it actually brings the notes forward. And you can also set other things like we've got like a user status where you can set a copy request. So the idea of that is you can then follow up your copy requests at the end of the month. So the other way to get at your statements is you can use the search screen, which is more common in a shared service center. So you can see I can select statements by company code or supplier. So I might be responsible for suppliers based on the alphabet, for example. You can select different statuses. So I probably don't want to see fully matched because there's no exceptions, so you can untick that. You can save your search as well, but if I hit search, it's basically going to give me a list. And then once you're on the list, you can sort them by statement value, for example, or statement date. You can move these columns around as well. And I'll show you one at the bottom. So this is fully matched with data mismatches. But it's quite a big statement. So on the first page, it all looks good. It's all green. But what you can do is actually put a filter on to just display the errors. And then these are the ones that you need to work on. So I won't go through them all, but there's some quite common errors on this one. If you look at the first line, I've got an invoice for 105.78 on the statement, and it's on your system with an extra 1. So someone's keyed it in incorrectly. The second one is a really big one. It's a credit note on the statement, and it's on your system as an invoice. So debit credit the wrong way around. And the way the system works is you would fix these on your ERP system, and then because we get a new file every day from customers, if you fix them on your ERP system, this would get re-reconciled, and these would all turn into matched. So next example is one at the top, which is unpaid items missing on statement. So everything on the statement is matched, but we have a section at the bottom called unmatched ERP invoices. So if you look at this vendor, I've got an unpaid invoice for 286.80 dated the 25th of Feb 15. And then if you look at the statement, they're all between March and April. So why have I got a Feb invoice on the system? It's a regular amount from this supplier. I can see I've got one for the same amount in March, one for the same amount in April. So it's probably a duplicate. We've got lots of reports on the system as well. So I showed you the missing credits report at the beginning, so you can see that halfway down the list. I've got the same type of report for, you can list all the statements with debits and credits the wrong way round, or incorrect currencies, because a lot of our customers want to prioritise, the exceptions. So you can run those reports. We've also got some supplier-based reports as well. So a lot of people use the critical supplier report. So that's where you can flag a supplier as critical, and then you can run a report to make sure that you've received the statement from them this month, and they've all been put on by the team. Optionally, you can also give suppliers access. So you can actually invite suppliers to log into the portal. And what the portal gives you is the supplier can see their invoices. So there's like a My Invoices tab, so they can see their invoices, the statuses, the due dates. They can enter, specific invoice numbers if they're looking for a big invoice. They can also submit messages on this page as well, which would come into your email inbox. And they can also list their payments. So if they click on a payment, it will show them the invoices that relate to the payment. So this is really useful for the supplier. And if you want to be really radical, you can also allow suppliers to upload their own statements. So suppliers can actually import Excel statements directly via the portal. And then, of course, you would see the results your side. But it's kind of a way of putting the onus on the supplier to reconcile their account, because they're just as interested in getting it right, just like you are. And then, so you can see, this supplier's got some missing invoices, so hopefully they would send those in, and then you would see the same results on your side. So I was going to end my presentation on, kind of how we approach it. So we do offer a proof of concept for customers. So this is where you can download data for 10 suppliers. So, anyone in AP would have access to do this. So you would download all of the open items and 3 months paid for 10 vendors. Give us some statements, Excel or PDF or scanned images, and then we would build the system, and then we set up a training session, and then that's day 1 of your 4-week POC. And then we always have a weekly call with people, see how you're getting on, work through any issues, and give you additional training. So that's something that we encourage people to do if they're interested. The way the pricing works, there's 2 parts to the pricing. There's a fixed monthly subscription, and that's based on how many invoices you process per year. And then there's a monthly cost for the statements, which is variable. So we charge a fee for Excel, and we charge a fee for the paper and PDF statements. But if anyone's interested, you can request a calculator after the call. From a commercials perspective, it's just a 30-day rolling agreement, and there's no minimum term, and you can cancel at any time. So yeah, if in summary, the whole point of the system is to automate the reconciliation. So really, customers are able to process far higher volumes of statements than they could manually. Obviously, you're going to keep on top of your process, make sure that supplier liabilities are accurate. If you share reports with suppliers, that should equal less queries. And it's cloud-based, so it's very simple to set up. Once we get data from customers, the system can be up and running within a week. And yeah, like I said, we offer the 4-week POC. Right, so that was a whistle-stop tour, anyways. So yeah, thank you for listening, and I'll hand over to Ellen.
Okay, thanks, thanks Daniel, and Richard as well. Thanks for a very insightful webinar. Okay, so we have had a few questions in. The first of which I will put forward to you, Richard, which is someone's asking, how many invoices are you processing each year across how many suppliers? Have you got that figure to hand?
Yeah, so on a monthly basis, it is 70,000, as I mentioned. That comes down to about 800-900 in a year, 800,000 in a year, and the active supplier base is around about 2,500. Probably, well, following the transition and incorporating all the local entities, it's probably more around 3,000 now.
I don't think we can quite hear that that last bit, Richard. If you could move a little bit closer to the audio system there,
Sorry.
that would be fantastic. Okay,
Sorry.
that's great. Yeah. So
is it better now?
Also,
okay. So,
that's much better. And also, in case you didn't catch that, could you just summarise just roughly how many invoices you have each year?
yeah. So we have in between 800 and 900,000 following transition now, and that's spread across about 3,000 active suppliers.
Okay, all right, thank you. And how many statements are you reconciling each month?
Currently, we reconcile between 250, 350
right,
statements
okay.
in a month.
And I'm not sure whether this question is probably for both you, Richard, and maybe also for you, Daniel. Someone's asking how long the implementation process took.
Well, the implementation from ARES perspective was fairly seamless. I think Dan mentioned a few bits about the timeline, proof of concept, and so on. But from my perspective, it was seamless, only with a few internal hoops that we needed to jump through with our IT. But that was only to make sure that we can get an integrated solution where we don't need to add any manual input. And then once that happened, so once IT was on board, it was a fairly straightforward process to do. So the implementation was fairly quick, in a matter of a few weeks.
Okay. And someone else was asking how much time has been saved since implementing statement matching, and I guess it's a double question if you know the answer, which is where has the saved time been allocated? So first of all, how much time do you think has been saved since implementing, and where has that been allocated to?
Right. So I don't have a figure for the time saving, because the time saving sort of was instantly converted into other type of activities. What we wanted to achieve with statement matching is to convert the time of the account payable clerks, the query clerks in particular, so that they don't do the legwork, they do the investigation. So they don't actually work less, but they work smarter. The time that they saved, or we saved for them with the statement matching solution, they spend with the investigations, actually. So we transformed it into a more value-add activity on their end.
Okay, thank you. And here's an interesting question. Someone's asking, what techniques were used to influence the business to receipt items accurately on a timely basis? And then they go on to add that you can probably gather from my question, it's a challenge that we're facing on a daily basis where AP receive an invoice but cannot make the payment at the receipting process, or sorry, as the receipting process has not been completed. Is that something you're able to answer, or do you want to take that one offline?
Sorry, I couldn't fully catch the first part.
Yeah. So
it was about the
receipting yeah. So what techniques were used to influence the business? I guess that's the question. To influence the business to receipt items accurately on a timely basis.
Right. So it has two sides to it. In our business, we deal for the bigger extent with items that we stock, that come into our warehouse, and that is a fairly well-established process. So it does not depend on the business itself. Fortunately, I should say, it depends on the delivery process and how a warehouse is booking in the goods. And that is, I should say, fairly efficient. So we don't have issues in that regard. Where we have issues, though, is the indirect part of our purchases for stuff, products, or services that are not stocked, and therefore we don't really receive them. Now, in the past and before the transition, the operating companies were using a similar goods receipting mechanism that we use for the stocked items. But with the transition to the shared service center, we changed that, and for that part of our purchases, we actually use two-way match. So we don't require the business to provide us with receipts, exactly because that is a challenge, because that just leads to churn. That's not a natural thing to the business to do a receipt in a goods receipt on a PO concerning a service they bought. So we decided basically to ease that process and take the three-way match out and turn it into a two-way match.
Okay, thanks, Richard. We have had a number of other questions which are specific. So I think we'll take those questions offline. You will have those questions answered, so don't worry. I know there's been a number of other questions. We'll put those across to both Richard and to Daniel, and get those questions back to you today, those answers back to you today. But for now, we are just about out of time. And I want to say, obviously, thank you very much to you, Richard, for your excellent webinar presentation today, and to you, Daniel, as well. And thanks to you all for joining us. We will have recording of the webinar available as well, so that will be sent out to you, as well as the slides. So you'll get those in the next day or two. And also, we'll look forward to welcoming you back to our next webinar, which is on the 18th of July. I hope you enjoyed it today, and we've got some useful nuggets of information to help you learn how to do things differently and achieve what RS Components have been able to achieve. And I hope you enjoy the rest of your day. Thanks again to you, Richard, and to Daniel, and many thanks to you all. Thanks.
Thank you.